People always say start with long-term rentals because they're easier or less risky than Airbnbs. But here's the truth that no one's telling you. Airbnbs are one of the only real estate plays that are actually going to move the needle if your goal is financial freedom. And in this video, I'm going to break down the differences in owning Airbnb properties versus long-term rentals. All right, so jumping right in, we're going to compare the cash flow, okay? Now, anybody who you talk to that owns a decent amount of long-term rentals and have owned them for a long period of time is going to tell you that you're really going to be pocketing $100 to $200 per month after repairs and vacancies and evictions and capex, and you stretch that out over a period of time. And on an Airbnb property, a good Airbnb deal will do $2,000 a month after your expenses. So ultimately, there's an opportunity to 10x the amount of cash flow here, and it's definitely not 10 times the amount of work. Next comparison here is appreciation, and we can also throw in asset quality as well. So, appreciation is another benefit of owning real estate. But when you own long-term rental properties, the thing is, if you want them to cash flow or at least break even, you really can't be spending much more than, $150, $200, maybe $250,000. And on a good quality Airbnb, you can spend $500,000, $600,000, $700,000 and still cash flow at that $2,000 a month mark. So when we compare, a 5% appreciation per year on a $200,000 home versus a $500,000 home, that $500,000 asset is going to be appreciating, at a higher dollar amount per year. You're also going to be having higher quality properties in the Airbnbs because, you wouldn't buy an Airbnb unless it's, high enough quality to draw a premium on a nightly rate. So, your kitchens and your bathrooms and, your backyards, and all your fixtures, everything's just going to be in general nicer. It needs to be to compete as an Airbnb. So, you're going to have a higher quality asset as, things do appreciate over time, as well as just a better location. Again, when you're buying long-term rental properties, you're not buying in the best neighborhoods of the cities that you're investing in, because the best neighborhoods, the people who live there are going to be owning the properties and the values are just going to be so high that they wouldn't, make sense. But on Airbnbs, a lot of times we do need to buy in those higher desirable locations. So just all in all, you're going to end up with more appreciation and certainly a higher quality asset with Airbnb. Next year is going to be tax benefits. And this is something that a lot of people don't fully understand. So all real estate is going to come with tax benefits. But when you have long-term rental properties, those are considered passive investments, meaning the tax benefits on those properties are only going to be able to be used to offset other passive income sources like capital gains or maybe, your stock dividends. But ultimately, they can't be used to offset active income like your W-2 job. But an Airbnb, if you actively manage it, that is considered active income. And therefore, any loss that is generated from that property can be used to offset other active income. And that's going to be the lowest hanging fruit for a lot of people, especially high income earners and business owners, because all of their income is considered active. So you could have this loss from your long-term rentals, but the IRS isn't going to let you use it where it matters the most. And another thing with tax benefits, when you hear the word tax benefits on real estate, all it is just depreciation most of the time. And that depreciation is calculated based off of your purchase price. So again, when we compare a $600,000 asset versus a $100,000 asset, the overall depreciation is going to be far greater on the Airbnb side. All right, next here is mortgage paydown. So, almost all of your real estate deals, whether long-term or short-term, you're going to be buying on a 30 or a 25-year note, meaning you're going to have 25 or 30 years to pay it off. So it's going to be the same loan term. But in general, when we talk about the guest or the tenant paying down our mortgage, you're going to gain more equity over time on those higher-priced Airbnbs. Because again, you've got a $600,000 house today versus a $100,000 house today. They're both going to be paid off in 30 years. But let's say 15 years down the line, you want to refinance or sell the property. Your guest will have paid down far more of your mortgage than your long-term rental tenant because, you just owed more money on the property. So again, the tenants are still paying down the note, but you just get a better asset that's worth more money. All right, so next year is tenant versus guest quality. And this is something that a lot of people don't even consider when they're buying real estate investment. So with long-term rental properties, you got to think, the types of people that are going to be living in $150,000 to $200,000 homes are just going to be a completely different type of person who is spending, $500, $700, maybe $1,000 per night to stay in your vacation rental. Those long-term rental tenants are going to have additional life stresses and just higher eviction risks. With the Airbnbs, again, you're just going to draw a higher quality guests. You have short-term stays, and a lot of times they're traveling for, leisure or vacations as well. And again, the types of people that are spending, the money, if you're doing a good Airbnb deal, are just going to generally take better care of your stuff. You also have fewer long-term headaches. If you get a bad tenant in your property, you might have signed a 12-month lease with them. I have a little bit of a headache guest this weekend. They're going to be out in a day or two. And, I can get back into my property and ultimately, address anything that might need taken care of. All right. And then last year is going to be the startup time and effort. So yes, Airbnbs do take more time and overall money on the front end. We can actually take advantage of lower down payments on these properties. With the vacation home loan, we can get 10%. We've even got lenders who will get out to 5% down on the Airbnbs. So the down payment percentage might be lower than a long-term rental, but then we do have like the furniture and the design that we have to account for after closing. So yes, you need to invest more money, and yes, you need to invest a little more time in setting everything up and dialing in your systems. But when we go back to moving the needle towards freedom and cash flow, if Airbnbs are cash flowing 10 times the amount of a long-term rental, it is nowhere near 10 times the amount of money or effort that it takes to launch an Airbnb. Once they are launched, I would actually consider the cash flow on an Airbnb to be more stable. At one point, I did own over 40 long-term rentals, and I've sold off most of those to buy higher quality Airbnbs. But the biggest thing that was unstable in my long-term rental portfolio was what happened after a tenant had moved out, whether it was through an eviction or, it was just after their 12-month lease was up. And we would take back these rental units and you would be surprised that, how many times we would have $7,000, $8,000, $10,000 in repairs just to get that place re-rented again. So, when you own a portfolio of long-term rentals, at least in my experience, things might seem like they're going well, but I got to a point where it was basically once a month, I had this large kind of unexpected expense as a tenant would move out. Again, whether it was an eviction or just a planned move out. And with Airbnbs, it's just, I would say more stable. I don't deal with that volatility. I have cleaners who are in there 3 times a week, professionally cleaning the property. It's always in tip-top shape. And, if I do have a maintenance issue like a leaking sink or, a roof, I'm going to know about it right away because my team informs me. With those long-term rentals, those tenants wouldn't call me if the sink was leaking. They would let, the wood just disintegrate, underneath it. And then that's where really things started to add up. So even if they didn't damage the unit, themselves, it was ultimately, they just didn't take good care or care to reach out to me when I did have a maintenance problem. So in general, the ROI is just far greater than long-term rentals, once you've got good systems in place and the property is operating. So at the end of the day, yes, Airbnbs do take more time and money up front to launch. You've got your design and you've got setting up your furniture and you've got, dialing in your automated pricing and, launching your listing and building your team with your cleaners. But on the returns, you've got better cash flow, better write-offs. You're going to appreciate more over time. And just in general, you have a higher quality asset that you can be more proud of. And I would take that trade every single time. So if your goal is freedom and not just owning a bunch of doors, Airbnb is likely the smarter play for you. So if you're considering getting into real estate and you're on the fence, should I buy an Airbnb or a long-term rental property? I'd invite you to book a free deal planning call below. I'll put the link down there and we'll jump on the call. We'll talk through your goals. And then if you want to learn what it would look like to team up with us, where we will find you a good Airbnb and then walk you through the process of successfully launching it, we can share all that with you on the call. So again, I'll put a link below. It's a free deal planning call, and we look forward to connecting with you.